Welcome to Quartz Smart Investing. I'm Merrill Brown. Our guest today is Kristina Hooper, Chief Global Market Strategist at Invesco. Kristina, thanks for joining us.
Merrill, thank you so much for having me.
Pleasure. We're moving closer to the end of September deadline for a government shutdown. How do you assess the potential impact of that on business and on the markets?
Well, it all depends upon the length of it and really the extent of it, because we know that quite often government shutdowns can be limited to just a few parts of the government. So at this juncture, it seems as though if it is like similar shutdowns in the past, relatively short in length, it won't have a material impact on the economy. And quite frankly, it will only have, if any, a very near-term impact on markets, create a little volatility, a little uncertainty, but as we've seen in the past, it typically goes back to normal fairly quickly.
But in terms of the moment we're in right now, you've written about the UAW strike and other things going on right now. There is some risk that it could balloon and become more an event than just a passing several-day thing, right?
Well, certainly there's a perfect storm. We have a lot of uncertainty around policy, although I would say that the greater policy uncertainty by far is the Fed. But certainly all those events, that confluence of events, could create more volatility and some kind of reduction, perhaps a small crisis in investor confidence in the short term.
You're a very devoted follower of the Fed and of central banks around the world. What do you see happening right now as they all move in a certain direction?
Well, they are definitely at or near the end of their rate hike cycles after what have been incredibly aggressive periods of tightening. And so the real question now becomes, when will they start cutting rates? And there's a big question mark around that because it is all data dependent. Now, I know markets really reacted viscerally last week to that alteration in the dot plot in terms of expected Fed funds rate at the end of 2024, implying 2 cuts as opposed to the 4 implied in June. But my view is that we just don't know what they're going to do. And I would err on the side of probably 4 rate cuts next year as opposed to 2. Because I do believe there are significant lagged effects to monetary policy that will show up in the economy, that has done some damage, and will compel the Fed to cut more.
Next, Kristina Hooper on her view of the bumpy landing ahead for the U.S. economy.